After sideways and downwards consolidation for over a month, Bitcoin finally has broken out of its formation, up almost 45% in just over a week, from lows of $29,000 all the way up to over $42,000 for Bitcoin. However, we have been held down by this extremely critical resistance. So, what is going on, guys? My name is K-Dub. Welcome back to the channel. Hope you're having a great day today. Now, having a look at the Bitcoin price, we can see that we have not been able to battle against that critical resistance. And also, something that just came out is that the U.S. infrastructure bill is set to bring regulatory changes to crypto. Now, you can see right here, a provision in an infrastructure bill being debated by the U.S. Senate has prompted concerns in the crypto industry as it boosts IRS reporting requirements for investors and brokers. And if you are from the U.S. specifically, you're definitely going to want to stick around to the end of this video to see exactly what this means for the price of Bitcoin. So I do want to talk about the fact that we have had an amazing few weeks for Bitcoin. We had a monumental close. This is good. The bulls are back, but is it enough? Lots of people are pointing out the Wall Street cheat sheet, saying that, potentially this could just be another lower high in a sequence of lower highs, and we are still potentially in a bear market due to the fact that we have not been able to reclaim the 200 daily moving average. So in today's video, what I want to go over is what this move has actually meant for Bitcoin. Should we be getting excited? It certainly has been exciting times, but does this mean that the bulls are truly back, or was this just a simple short squeeze? So we're going to go over all that today. If that sounds good to you, you know what to do. If you are not subscribed, definitely consider it. And 30 seconds for everybody wondering where I have been for the past week. It has been a crazy week over here, obviously for Bitcoin, but for me as well, guys. I've been dealing with stuff for my garage, dealing with the zoning board over in my town. Also had the family dog die, so we had to put her down. Brooklyn, I had to be there to help the family out. My dad was in surgery for his shoulder. Then one of the pins came out. He had to go back in again. On top of the fact that I may have potentially been scammed out of a decent sum of money from someone who I thought I could trust in the space. I'm not going to go into details to who it is. You might know, but lesson learned from that. But on the bright side, guys, I was able to actually attend a pinball festival over in Allentown, Pennsylvania, and there's a chance that I could be in a Netflix documentary. So not that you care about any of that, but I have had an insanely hectic week. But now we are back. We are focused. We are going to look at what is happening right now with Bitcoin, because it has certainly changed some things, and we need to discuss where we could be going moving forward, right? So having a look right here, we're going to do some super quick analysis. I don't have anything too crazy to say. As we can see, we are basically back in this blue box territory. We have a lot of resistance here due to the fact that we couldn't break above it, back here after we hit the $42,000 level and had the pullback. We also made an attempt here on the week of June 14th as well, and we did get above it. However, we do find ourselves back inside of this level again. Now, on the bright side, it was a very good weekly close. We are above both the 50 EMA and the 50 exponential moving average, which is great for Bitcoin. And if we have a look at the stock to flow model, Plan B says July closing price 41,490. It bounced from the lows like clockwork. Now, I know this has been a little bit of a controversial model. There's some people say he just changes the parameters, but that being said, it does appear as if Bitcoin is simply just doing what Bitcoin does, but that doesn't mean that we are out of the water just yet. Now, you could see that we have, number one, massive overhead resistance on this diagonal right here. And you can actually see that we did have these 2 points, right? We touched right here, which was the top, which was the $65,000 level. Then we came down here to around that $59,000 level. And just by simply drawing this line, extending it downward, you could see that we still have technically not broken out of that level. Now, we did break multiple resistances below. We broke out of this descending triangle, right? Which was looking extremely bearish for a while. We did get a potential short squeeze, which basically means that there were a lot of people shorting Bitcoin. So what ends up happening is exchanges essentially have to buy back the Bitcoin once the price starts going up. I'm totally oversimplifying this, but essentially what I believe we had was a major short squeeze. But the thing is we are still if you look at these two red lines, the top and the bottom, we're still just bouncing around in this channel that we had formed way back here during the $42,000 high. And you can see really all we continue to do is bounce around in that channel. So for the bulls to really truly prove that they are in control, we need to not only get above and hold above the $41,500 level, but more importantly, break above and out of this downwards trend, potentially having it flip resistance as support. So right now, as we speak, that level is actually around $44,400 if we were to go up straight today. We also have the 200 daily moving average, which is around that exact same level. Now, keep in mind, they do say traditionally, if you are below the 200 daily moving average, then you're theoretically, technically sort of in a bear market, right? Now, I'm not saying that Bitcoin is in a bear market. I'm just pointing out what I'm seeing on the charts right now because it actually looks even more intense if you go over to the CME futures chart. The CME futures chart actually perfectly touched not only the resistance that we had put in horizontally right here, but also the diagonal resistance right here. And you can see that currently we have pulled back from those levels. Not to mention the fact that we do have a potential CME futures gap all the way down at 32,000. So it could be possible that Bitcoin is looking to maybe close that gap. Who knows? It could happen. It might not happen. But at the end of the day, the most concerning thing about what is really happening right now in this chart is ultimately this structure. If the bulls are unable to actually get above this diagonal resistance, what we're actually ultimately putting in is this high right here, and then we have this lower high right here. Now, obviously, not to talk about anything bearish, it has been an amazing week for Bitcoin. Congratulations to all the hodlers. However, as you can see, the good old Wall Street cheat sheet chart is a little concerning, where you do have this euphoria phase, you have this blast off, we come back down, everybody thinks it's over, then we have this huge pump, kind of like we just did, everybody gets excited again, but then we fail to put in another higher high. And if we have a look right here, essentially that is what we are doing. So the bulls need to step in, they need to take control. Yes, it's been a great week, but that's not enough to confirm that we are full on in bull mode just yet, right? In fact, if you have a look over here, essentially at what we did back in 2017, we did have exactly that, right? Where we had this crazy blow off top, Bitcoin came all the way back down, we had this lower high, and then we essentially just continued downwards, for over a year. And the other thing that we need to know about Bitcoin is once this 200 daily moving average was lost, that was really the signal that, it was time essentially for the bears to take over, right? Now, like I said, I'm not taking away anything that has happened for Bitcoin this past week. I am saying, though, that in this scenario, we haven't even been able to claim the 200 daily moving average. So you could see if we do the same thing right here, it's kind of looking like a very similar pattern for Bitcoin, right? So that's why I'm saying right now is very critical. We need to see Bitcoin break through probably the most important resistance that we have right now. Number one, definitely being the 200 daily moving average. And obviously the second resistance being this simple trend line right here. We need to put in that higher we need to put in a higher high, at least getting in and holding higher than back here around 42,000, which we briefly got above it, but it wasn't really enough for convincing me that, the bulls are back, specifically as far as the bull run is concerned. Even though we did have an amazing 44% pump, you cannot deny that that was incredible for Bitcoin. But that being said, guys, we still need to get above this. In fact, we're actually pushing below the 100 right now. And you can see right here behind me in the VPVR that, once we do get above these levels, it looks like the next level that Bitcoin could potentially want to go up to is around the $54,000 level. Now, we had talked about this level a long time ago, and I had said that I could easily see Bitcoin getting back to $55,000. Will we get back to that after this move? I don't know, but ultimately, in the grand scheme of things, you need Bitcoin to start putting in some kind of a macro higher high, which you could argue that, yes, we have sort of done that over on the weekly chart, but we are still not out of the danger zone just yet. So having a look right here, I did want to give a shout out to altcoin Psycho. He made sort of a very simple chart to understand right here. He says, if we reclaim the range high at 41K, long and close at 41K, long and close at 49. If we lose 36, short to 29K. So obviously not financial advice. Anything on this channel is just my or other people's opinions. I'm just sharing it with you. If you are interested though in learning how to do that. If you do want to long or short Bitcoin, you can do it over on Bybit. You can also do it over on Femex. There are lots of options to also trade altcoins. Femex has gold. If you guys are interested in that, I have links below. Lots of bonuses, $1,200 for Femex, $800 for Bybit. And if you have no idea what you're doing, definitely don't try this out. If you have not watched my tutorial popping up above, make sure that you watch that before anything else so you know how to trade responsibly and profitably, right? So let's move on now. Let's move on to the big news of the day. So U.S. infrastructure bill set to bring regulatory changes to crypto. Now, if you are a U.S. citizen, this could be a little bit concerning. However, if we really think about it, in the short term, globally, it's probably going to affect everybody, especially if this is as bad as they say it's going to be. So rather than have myself analyze something like this, I actually thought we'd take the opportunity to check out this Twitter thread that came out from Jake Chervinsky. Now, he is known as the crypto lawyer, right? He's very familiar with these matters, and I wanted to explain to you what his take on this situation was. He says a new provision has been added that expands the tax code definition of broker to capture nearly everyone in crypto, including non-custodial actors like miners, forcing them to all KYC users. KYC is a process of essentially learning information about who is using or trading on these platforms or these services, and know your customer. KYC, that's what it stands for. So he goes on to say that the bill expands the definition of broker to include any person who, for consideration, is responsible for and regularly provides any service effectuating transfers of digital assets. Earlier drafts even said if it was non-custodial, so this would even include things like decentralized exchanges or P2P, person-to-person markets, which is quite interesting. How do they plan on doing that? Well, let's read on a little bit. This definition is so broad, it could apply to nearly every economic actor in the U.S. crypto industry if read literally. It might include a huge range of DeFi market participants too, like DEX LPs, liquidators, protocol governors, etc. The tax code requires brokers to comply with the IRS reporting requirements. Most importantly, they have to give the Form 1099 to their customers and file them with the IRS as well. He says, it's literally impossible for non-custodial actors like miners to get the information they need to do the form that's being required, 1099. In practice, this could mean a de facto ban on mining Bitcoin in the USA. Now, this would be a major setback, right? After we've seen, El Salvador adopt Bitcoin, and we've seen even, for example, Mayor Suarez, right, from down in Miami, talking about how he would love to move some of that Bitcoin mining over to Miami. We've seen some progress down in Texas as well. Well, what would that mean if that ban outright happened? Well, it certainly would not be good. I mean, we saw what happened when China banned Bitcoin, although China FUD is old news. But if US was to do it, that would definitely not be good. Now, of course, this is all speculation. This hasn't passed yet. None of this is even happening currently, but it is something to be concerned about, because he says even though this does sound insane, it is quite important because it could actually happen this time. He says most crypto legislations go nowhere, so it's easy to ignore, but not this time. This provision is part of the bipartisan and otherwise popular infrastructure bill, which is moving quite quickly through Congress and is likely to pass. He says there are three main ways to raise revenue in a bill like this. You can either increase current taxes, add new taxes, or improve tax compliance, and it appears that what they are focusing on is improving the tax compliance. Now, we all know that you need to report your trades, you need to report your gains, okay? We already know you're supposed to be doing that. If you're using crypto to try to avoid taxes, well, I'm not going to sit here and tell you to do that, because that's just not the way that it should be done, but you do you. He goes on to say this is a deeply misguided provision. If adopted, it will actually do far more harm than good for U.S. interests. First, it defies logic to adopt a regulation for which compliance is literally impossible unless the goal is to kill the industry. Second, it'll be a huge foreign policy failure. After China made the geopolitical blunder of forcing miners out of their country, many of us hoped the US would take market share in this crucial sector. We cannot make the same mistake that China did. We have to stay in the game. Third, it won't work. For every new dollar of tax revenue, we'll lose 2 or 10 as the US crypto industry shuts down or goes offshore. Most likely what's going to happen is they're just going to take their business elsewhere. They're going to go to other countries that are more crypto friendly, once again placing the US farther behind in this crypto adoption race. And fourth, it short circuits the discussion that we've been talking with FinCEN. Now, it does go on, to talk a lot more about it, but ultimately, the most important thing that you need to realize right here is that it's not time for panic. He says it's not final, and obviously it can still be changed. Even if it does pass, it's probably not going to take effect until sometime in 2023, which will give the crypto industry a lot of time to figure out how to deal with it. Maybe even potentially have some of this, amended, reversed, revised, whatever. And yeah, he ultimately says the burden it'll place on civil rights is unacceptable. And at the end of the day, would this hurt Bitcoin? Yes, it probably would in the short term. However, we have seen that Bitcoin continues to be the honey badger. Bitcoin didn't need institutions. It didn't need the approval of the US. It doesn't need the approval of China. It is borderless. It is censorship resistance. It is truly and honestly your funds if you hold the private key, right? Do not trust, verify. That is the answer. So we know that, and even just going on, seeing what, Michael Saylor, for example, right? We all know Michael Saylor. Some people think it's a joke what he's done, getting all this money and putting it into Bitcoin. Other people think he's a genius. He says there's no reason not to hold Bitcoin for 100 years. He defended the company MicroStrategy's bullish take on Bitcoin, saying that it could potentially be the future of the property, or it says potential to evolve into the future of property. I think that might be a typo. Anyway, in an interview with Bloomberg TV, he argued that MicroStrategy's big bet on Bitcoin, which it has turned to the debt markets to sustain, is the highest upside, lowest risk strategy the company can pursue. He says, we think that by holding Bitcoin, we are diversified because we can see Bitcoin at least on the balance sheet of multiple cities, states, governments, companies, small and big investors alike. And we have seen the light shining on Bitcoin recently. We have seen lots of positive news coming out for Bitcoin, and we have seen extremely strong fundamentals, but we do know that it's always sprinkled with a little bit of FUD. There's always got to be a little bit of FUD, right? It wouldn't be another day in crypto without it. Ultimately, though, he says Bitcoin is going to be the core tech of innovation at Apple, Amazon, and Facebook, so that's why we want to be holding Bitcoin. He also says people joke that Bitcoin isn't really a trading strategy, it's an exit strategy. We want to hold it in the form of non-sovereign store of value forever. He says, I took a survey on Twitter, and most users think that Bitcoin is going to last for 3,500 years. He says nobody's in a hurry with Bitcoin. We're not worried about what's going to happen tomorrow. We're not worried about what legislation is going to do in the next week or the next year. We are thinking about the long term of Bitcoin, and we're thinking that it is the future of property. And there is actually a metric that we can look at that does prove this a little bit. In fact, you can see right here, crypto users, at least the number of users, has doubled in just the past 6 months. Now, I really want you guys to think about that number. Crypto users have doubled in just the past 6 months. So it took Bitcoin 12 years to get to this point, and then in 6 months, we completely doubled that. It's actually really incredible. You are seeing the interest in Bitcoin. You are seeing the interest in cryptocurrencies. Research carried out by Crypto.com says more than 220 million users of crypto. Officially, that was their number by the end of June. The company said it used on-chain data and other parameters to compile the figures from 24 of the largest crypto platforms. The figure compares with the 9 months that it took for user base to reach 100 million from 65 million. The growth that we've seen in the first half of 2021, according to Crypto.com CEO, he says on our platform and industry-wide is very encouraging, and we will continue investing heavily as we pursue our goal of putting cryptocurrency in every single wallet. Now, while we may not know if some of these wallets are owned by the same person, right? One person could own 10, 20, 30 different wallets. This is something that we need to pay attention to. So regardless of what is happening short term for Bitcoin, even if we actually are being held down, and let's say we do still go into that potential sideways, boring market where we just keep, bouncing around essentially, in this area right here. At the end of the day, guys, it is inevitable. Bitcoin is the future. It is, guys. And if you don't think that, I don't know why you're watching this channel. Go watch this channel on stocks or something like that. I've been buying Bitcoin since 2017. I have dollar cost averaged. I have bought at 2,000, 20,000, 13, 6. I didn't buy any at 65. I believe I did buy a little bit around 36,000. I actually posted that on Twitter when I did, and I will continue to dollar cost average into Bitcoin because in hindsight, going from 65 down to 29 may seem like the end of the world, but if you truly do believe that Bitcoin is going to 250,000, 500,000, a million, $5 million, then really any prices today, tomorrow, next year are certainly a discount. So that being said, thank you so much for coming back to the channel. I do apologize for my lengthy little time I had to take off. It was a crazy week, but you know what? Honestly, I saw the charts. Bitcoin was pumping. I knew you guys were all happy. I didn't really think you'd mind if I wasn't around to celebrate with you, but it's time to get serious because we are at that critical resistance. So we are going to keep you updated on exactly what is happening. There are lots of opportunities to make money in this market if you are longing, shorting, or even just simply spot trading, right? You don't always have to use leverage, right? You could just buy and sell that way. At least you have your position. You don't really lose anything, right? So if you are interested in learning how to trade, make sure that you watch these videos popping up right here, right now. And until next time, stay crypto. And of course, peace out.